Hello and welcome to another episode of the Startup Operator Roundup. I'm Roshan Karyappa.
And I'm Gunjan Saha, and together we'll be breaking down the biggest headlines from India's growing startup ecosystem. In this week's roundup, we'll be first talking about the fantastic response that Mamaearth has received in its IPO. Its shares were oversubscribed by almost 8 times. Then Zomato is back in the game, closing above its listing price for the first time in over 22 months. Then we'll be talking about the threat alerts which Apple has sent out to many of India's political leaders, and we'll be discussing the controversies surrounding it. Then in other news, Wework, which was once valued at $47 billion, is now heading for bankruptcy.
Wow.
So a lot of exciting topics in this week's roundups, and so stay tuned. If you're a first-time listener to this podcast, then please consider subscribing to our channel, for we regularly share updates from India's growing startup ecosystem. And well, if you're a returning listener, then please like and share this video with your friends. Let's get started with the roundup. Well, Roshan, last week in the roundup, we were discussing that how Mamaearth is being, overvalued, and we may not see a blockbuster response, in the pre-IPO. But well, those things have been proven wrong. The shares were oversubscribed by 7.61 times. And well, this was not primarily driven by retail investors, but more by qualified institutional investors. Why do you think that's the case?
I think they've been able to sell their vision convincingly to some of these institutional investors, right? We did speak about the hypothesis earlier that this whole house of brands thesis, the likes of Mamaearth, Mensa brands, and so on, right? What they're doing definitely has some purchase, right? Because in India, building a national brand was left to the likes of HUL, Marico, and so on, right? I mean, they had massive distribution way back when. They had resources, infinite amount of money, time, logistics, and so on to enable this, right? And not to forget, put out ads in national television, newspapers, and whatnot, right? That game entirely has changed over the last 5-6 years. We've seen the rise of D2C brands, brands that have originated digitally on the internet, right? And we've had, fair number of them, right? Whether it is Wakefit, Mom's Company, Heads Up for Tails, plenty of others, right? Atomberg recently, and so on. All of these are fantastic brands, and all of them have a scale of like a few hundred crores at least at this point, right? In fact, Atomberg, I think, probably is more than 1,000 crores, right? So Wakefit as well is more than 1,000 crores. Now, these 1,000 crore brands, right, are the phenomenon that institutional investors are betting on. And if you look at the competition that these folks are going up against, again, look at HUL, right? Huge business in India, right? You don't even have to go to a level of HUL, right? I mean, you look at, some of the brands that, for instance, Atomberg competes with. Havells is a 10,000 crore business, right? I mean, if you take away even, 10-15% of that, that's a few hundred crores in itself. Right? So the market opportunity is rife. And the second thing that's happened is that you have a lot of experienced operators coming into the ecosystem, right? Now, these folks have some FMCG experience from before. They're coming in and they're setting these templates, playbooks, and so on and so forth. So people understand right now with a reasonable amount of certainty how to go from 0 to 50 to 100 to 500 and 1,000 crores and beyond, right? Now that is another thing that's happening, right? There's greater certainty on that front. So these playbooks have evolved. I think that is really what the institutional investors have bought into, right? And a fantastic job again by the Mamaearth founders and leadership team. They've done a solid job of selling this vision to the institutional investors. Retail investors, on the other hand, I think they're still a little spooked, because of what happened to Paytm and Nykaa and Zomato and so on after the listing, right? So they may come in at a reasonable price later on, I suppose, right? But this is fantastic stuff.
Well, and I was thinking that I should have, applied for the IPO at least. Getting it or not would have been different.
Yeah, I mean, you'll always have your opportunity, right?
Yeah.
I mean, you stay long enough in the market and, you will you'll definitely miss a few of these opportunities, but you know that a few more are definitely going to come up again. I still feel maybe at the right price, Mamaearth could be a great business to buy. I mean, again, none of this is financial advice, right? Well, clearly it seems like people are not listening to us, right? So, yeah, I mean, you do you know, but yeah, great business anyway.
Yeah, another thing like I want to point out here is the margins they have on their products, right? I
Yeah.
mean, some of the products have a gross margin of 70 or 80%,
Yeah.
in fact, right? So do you think that also plays a factor in how institutional buyers see it?
See, it just gives so much of, no pun intended, margin to play, right? I mean, with 70% margins, their net margins are coming down to single digits because of how much they're spending on brand building and distribution, now setting up offline and so on and so forth, right? I mean, the OPEX, all of that stuff, salaries, rent, this, that, whatever, right? But they have so much of margin to kind of play around. That's something that you can improve. Now, if your gross margins are, let's say, 30%, like in the case of some of the, food businesses and so on, right? It's very difficult to sort of play around in that, right? 70%, I mean, with some amount of operational excellence, with economies of scale, and, with processes maturing and so on, you can definitely go to double digits or more, right? Or higher than that, very easily. Right, or rather, I mean, I won't say easily. It's more straightforward compared to the other challenge of having lesser gross margins. So, yeah, I mean, that's perhaps that's also something that these folks have looked at, right? And the fact that I mean, we mentioned this last roundup as well, that the pace at which Mamaearth has been shipping products, or Honasa has been shipping products, is fantastic, right? I mean, they went from some 90 or 100 to around 250 plus products the last year, right? And they have 4 or 5 brands that are in the hundreds of crores category right now. So, yeah, I mean, somehow they've been able to convince the institutional investors on that vision, which is why, I mean, they've been oversubscribed.
Yeah, right. Okay, along other news from the public markets, we have Zomato. Zomato is back in the game, right? Last Friday, they closed at 116.5 rupees per share, which is higher than the listing price. And this was largely driven because they announced the Q2 results of the business, and that kind of really made investors happy. They reported a profit of 36 crores for the September quarter compared to 2 crores in June quarter, and a loss of 251 crore in the corresponding quarter last year. It is seeing profitable economics not just at a store level, but now also at a city level. And in some cities, it's Blinkit's GOV, which is the gross order value, is already more than Zomato's gross order value.
Wow.
But across its B2C businesses, which includes food delivery, quick commerce, and going out, the GOV has increased 47% year on year. But what's interesting to point out here is that this GOV growth is not because the the average order value has increased, but rather the volume of orders have increased. Right now, I think that's a very unique thing, because in our conversation, we have been discussing that all of these quick commerce companies or these food delivery companies, they need to increase the order value so that the logistic costs kind of become manageable, right? But here, will they figure out another way to improve their margins?
Yeah. No, it could just be a seasonal thing as well, right? That this time of the year, I mean, people tend to order more. Well, if I was Zomato, I'd be hoping that this is more of a permanent lifestyle change, which has happened to a degree. I don't think there are 100% of all meals that we consume are cooked at home, right? I mean, hardly. In fact, urban households, definitely that percentage should be more than 50%, I would guess. Right, and Zomato has expanded beyond just the urban cities to tier 1, tier 2, tier 3 as well, right? So I mean, it could be a permanent lifestyle thing as well. But kudos to the team. I mean, they've been able to manage profits, right? When last quarter they showed a profit based on a tax refund, right? I mean, so yeah. See, all of these businesses, I feel essentially these are value creating businesses, right? But It all depends on the operational excellence, right? It depends on how you're able to execute. And those are the hard lessons that, the startups have kind of learned, whether it's Paytm or Zomato over the last year and a half. And to that degree, right, I always, I say that public markets impute a greater degree of discipline than any other, right? So if you are going public, then, the public will kind of teach you how to run a business.
Yeah, as you mentioned, like we saw how the share prices went down for Nykaa, Paytm, and the other likes when the valuations they had in the private markets and versus the valuations they had in the public markets.
I think one of the threats that Zomato, Swiggy, and the others will also have to take cognizance of is the whole ONDC thing, right? Because see, restaurant owners aren't entirely happy with Zomato and Swiggy and the likes, right? Because they can take away as much as 25-30% of the margins, right, between the delivery costs and the advertising and so on and so forth. Right. So, I have not seen a business where, the partners are disgruntled that doesn't get disrupted. Right. So they will have to do something about that. I can understand, from a business perspective, they have to increase those margins and, which means that they will take away more of the money that, the restaurants will make. But yeah, I mean, with ONDC coming in, if these restaurant players are able to aggregate and figure out the logistics, right? I mean, that could be a significant problem for Zomato and Swiggy and the likes.
That's interesting.
Yeah, we'll have to see how that will impact the stock price later.
All right, now moving on to some other news. Apple has warned over half a dozen Indian lawmakers from Prime Minister Modi's main opposition of their iPhones being targets of state-sponsored attacks. Towards that, India's IT Minister Ashwini Vaishnav said that the government is concerned about the matter and is investigating to find the truth. He also downplayed the allegations, saying the threat notification received by them was vague and merely estimations. So, what exactly are these threat notifications from Apple? These threat notifications are designed to be a guardian of sorts, alerting users who might be on the radar of state-sponsored attackers. These are not your typical cyber criminals. They are backed by intense resources, making them extremely well-funded and sophisticated. Now, this kind of sounds like a thing from outside of a spy movie, right? Where the state-sponsored attacks, iPhones getting targeted, and Apple itself sending out notifications.
Right.
But what we cannot ignore here is the whole timing of this. We have the general elections coming up next year. So what do you make of this?
Leading up to the elections, I mean, obviously everything will be politicized. But this is, I mean, if it's an allegation worth considering for sure, right? I mean, it's not something you can be flippant about. And to that degree, I think the minister, Mr. Vaishnav, has asked for clarification from Apple, right? Because again, the statement is kind of very poorly worded, right? It says attempts to hack, right? It says state-sponsored. And stuff. Now, these are not things that you can throw around very casually, right? So, of course, I mean, we should understand, what are the details of this, right? And hopefully, I mean, there will be a proper probe, and we'll get to the bottom of this, right? Now, the opposition has said that, look, only we have got all this, right? And the ruling BJP ministers are, no one from their party has gotten any of this, right? To which, I mean, you don't really understand, right? I mean, what is the rationale? But this notice went out to thousands of people. Right. So it is not unique to the opposition party members itself. Right. So yeah, I mean, we saw this a year and a half back when this whole Pegasus controversy happened. Pegasus is a software manufactured by an Israeli firm that is, very sophisticated spy software, and people alleged that folks in the government were snooping some journalists and opposition members and so on and so forth. There was a Supreme Court probe on that matter, and nothing really came out. I mean, there was a clean sheet on any malfeasance on the part of the government and the policymakers as such, right? So yeah, I mean, let a probe happen and let them understand, right, what really happened. And if it comes to it that this wasn't anything serious, then Apple should definitely be asked to justify why they gave such a sort of a vague and poorly worded statement, right? Yeah, I mean, something to
But
consider.
there is some sort of evidence into like all of this, right? Because the groups like Amnesty and Citizens Lab have been investigating this issue, and they do seem to find a pattern. In fact, just last month, Access Now and Citizen Lab confirmed that Russian journalists did receive genuine threat notifications from Apple. Now, this adds a big tick mark to the checklist,
Hmm.
right? And you spoke about the Pegasus, the Pegasus software. Now, Pegasus software was used to to hack devices across the world, and this was done by an Israeli firm called the NSO Group,
Hmm.
right? But India also has a market. I mean, the government of India does bid for these spyware softwares, and they bid as high as $120 million.
Which is nothing really in the larger scheme of things. I mean, how much is defense spending, right? A few billions, right?
Yeah.
So 120 million is nothing, right? And you can't. I mean, correlation is not causation, right? Just because somebody bought the spyware, that doesn't mean that that in this case, first of all, that there was an attack, right? And second, that the attack was by the government as such. So it's hard to tell about these things. I mean, so there should definitely be considered seriously, right? And we should definitely probe to figure it out, right? One way or another. Because see, irrespective of parties, right? I mean, anybody interfering in the political, any external force interfering in the political matters is a serious threat. I mean, we're seeing that even in the neighbors, right? I mean, whether it's Bangladesh or Pakistan or elsewhere, right? So foreign interference in political matters is something that across party lines we should definitely condemn, right? So yeah, let's see what happens
Yeah, I
based is the
think
probe.
I mean, of course, there should be an independent analysis done by the government of India, and I think this also calls for an increase in transparency into this whole spyware market. But definitely has me curious, given that the elections are coming up. In other news, WeWork is preparing to file for bankruptcy as its share price has dropped by almost 99% this year itself. But people working out of WeWork offices in India, well, they don't have much to worry about because WeWork India kind of functions independently. In India, it's majorly owned by the Embassy Group, and they have a completely different business model than the global team. Its business in India is profitable and does not require any external capital to function. So, a company that was once valued at $47 billion is today valued at $2.9 billion. I mean, how does a company do that?
It's insane, right? You can talk about poor execution and whatnot. The best way to understand the WeWork story is to look at some of these numbers, right? They're doing about 800 million or so of revenue per quarter. That's about $3 billion in revenue for the year, and they have about $10 billion of lease payments to make, right? And some of these leases also are like 10-15 years leases, right? And there's a lot of talk that some of this was negotiated very poorly and they're paying top market prices for some of these properties, right? Yeah, so I mean it's WeWorks is a chaotic story, right? I mean, it's everything that one shouldn't do with a startup, really. Apart from the branding and whatnot, right? I mean, there was a WeWork documentary or a movie that came out. I'm not sure. I mean, did you watch it?
I've not watched that.
Yeah, I mean, this reminds me. I mean, I should probably dig that out and watch it, right? I mean, um, Adam Newman is a heck of a sales guy, right? He got SoftBank to put in $16 billion. I mean, $16 billion, right? Insane.
With
That's just
$16 billion,
insane.
we could have had multiple Chandrayaan and Mangalyaan missions.
Well, I mean, you can have a lot of anything, right? Because the Vision Fund itself, I think, was 100 billion something, right? Imagine $16 billion going into WeWork, right? They burnt something like $8 billion in the last 3-4 years. Okay, so it's just an insane story. I mean, the stock price was something like, I don't know, $400 or something at one point of time, and now it's trading at about $1. So it's just crazy capital destruction. And worst of all, I think Adam Newman cashed out at $1 billion.
Wow.
Okay, and I don't know what's even worse. His new venture again had raised an insane amount of cash, right, from Anderson Horowitz. So, yeah, man, I mean, it's just a very, I don't know, I mean, I don't know what to call it, right? I mean, it's just a story of such excesses, I would say, right? I mean, fundamentally, I think as a business, what was it, right? I mean, it was this kind of a business has existed before, right? I mean, you look at Regis. Regis is a 40 or 50-year-old business, right? And they're doing all right, even with the pandemic and whatnot. So it's just about the execution, I feel, right? And even now, perhaps, I mean, some large real estate company or some PE firm will sort of like buy them at a reasonable valuation, cut all of the flab, right? Default on some of their leases and whatnot. Right now, the bankruptcy will allow them to do some of these things, renegotiate a few of these other leases, and retain some of their more popular, what do you call popular Weworks, right? And run a decent business, right? Because fundamentally, there's value in that. There's value in shared space for sure, right? And you can argue that a lot of the investment has already been put in, right? I mean, you look at the interiors, you look at the brand and whatnot, right? I mean, it's already vested. So yeah, it could be a decent business for someone to take over and operate, I feel, right? But I don't know, it just breaks my heart, I mean, $8 billion. Phew. I mean, the amount of things that money could have flown into, right? I mean, I'm not even saying, cure for cancer or moon to what is that, mission to moon and whatnot, right? I mean, even other mundane things. It's just sad. It's just very, very sad. I think it's such a caricature.
Yeah. Well, a lot of learnings for our Indian startups as well, like from this story. Moving on to our recommended reading section, we have this fantastic article by Bobby Pinero, who is the co-founder and CEO of a company called Equals. He writes how freemium almost killed my business. And in this article, he shares his thoughts on how, he initially thought that if you reduce the friction which customers face in seeing the value of the product, that would lead to a more acquisition of users. However, it kind of seemed counterintuitive. By removing too much of friction, he saw its business collapse. There was no additional users being added, engagements dropped to abysmal levels. But then when you added something which he calls as necessary friction, again he saw the business go up.
Interesting.
So a very interesting point of view on how the freemium model works. We'll link the article in the description below, so please check it out. Okay, now for the talk of the town section, there's a very interesting post by Vaibhav Domkundwar, who is the CEO of Better Capital. He says that, yes, incredible India, but wait a second. There is no doubt that India is positioned the best it has been for startup innovation over the next decades. But that's also why we at Better Capital have been bullish and long on India ever since we started in 2018. It's the best time to build and the best time to invest in India. But it is also important to not oversell the largeness or the nearness of the incredible India opportunity. Because if you have to do this right, we have a long way to go. What do you make of that? What is your thoughts on the incredible India opportunity?
See, you can't oversell the India opportunity, right? And I have a slightly different point to this. It's not perfect. Nothing is really, and a lot of things we will figure out, right? But we should be all guns ablaze. We should be selling the opportunity, right? Let people invest money. I mean, whether it's a car or a piece of furniture or some software, right? I mean, imagine someone came to you and said, hey, it's okay, it's all right, I mean, will you buy it then? I mean, you won't, right? Someone has to call it the next best thing to sliced bread, and you might perhaps consider it, right? And you have to portray that confidence, right? Yes, there are things that we have to work out for sure, right? I mean, I'm sure that Apple has things that it can work on for sure, right? But it doesn't mean that Apple will come out and say, you know what, this is not as good as we thought it was, but it's fine, it'll do, right? Will you buy the next iPhone if that's the case, right? Even though, I mean, the newer models of iPhones have very marginal utility in my opinion, right? But I mean, it's you have to oversell. for sure, right? There are things that we can definitely work on, but not some of the stuff that is mentioned, right? Which is that we take a lot more people to deliver the same amount of services and whatnot. Well, I mean, in a nation of 1.4 billion people, obviously you're going to have an oversupply of people, right? And at the per capita that we're at, obviously there is an undersupply of capital, right? I mean, you're going to see those dynamics play out, right? I mean, there's always a Ramu Kaka, or there's always a Bunty, and on close call for you to get stuff done, right? And that's how it will be. Yes, I mean, we have to improve productivity for sure, but I don't think looking at headcount numbers and then looking at revenue really makes sense, right? Because you don't pay the same amount to someone in the US what you pay here, right? And people say all of these things of Indian engineer salaries have caught up to valley levels and so on. Well, absolutely not, right? I mean, the best of the best here are definitely earning that amount, and maybe even the upper median, I would say, right? But it's a long way off. I mean, it's really, really a long way off. India still has that sort of cost arbitrage, and yeah, I mean, we should be mindful of productivity. We should be mindful of building meaningful IP and all of that stuff. But I don't think there's anything to sort of undersell, right? I mean, I think we should do the flip thing, and we should definitely oversell this. Yeah.
No, for me, this incredible India opportunity kind of outlines the potential that there is in a country of 1.4 billion, right? I mean,
see, look at who you're competing with, right? There is China, which is the manufacturing capacity for the world, right? And then there is the US, which is built on exceptionalism, right? And then you have a bunch of these aspirational Southeast Asian countries as well, right? I mean, it's a competition. You can't say that, hey, you know what, we're great, but we have our problems. I mean, that's understood, right? We do have our problems, of course, right? And let's not drink the Kool-Aid along with the the investors. Of course, I mean, there's stuff that we have to work on, right? But you have to sell explicitly, and you have to sell it hard. Yeah.
Yeah. All right. Now moving on to some other fundraise news of the week. Space tech startup Skyroot Aerospace raised $27.5 million, which was led by Temasek. And along with this fundraise, they also unveiled the new rocket they'll be launching in January.
Fantastic.
So that was pretty cool, actually.
Amazing. Yeah.
Yeah. Then we have health tech startup SugarFit that raised $11 million from Mass Mutual Ventures, CureFit, Tanglin Venture Partners, and India Partners. FibMold, which is a startup focused on building sustainable packaging, they raised $10 million, which is led by Omnivore and Axel. So not many fundraise announcements this week, but I mean, the kind of increase in momentum we saw towards the end of October, well, I did not think, I mean, I did not expect it to continue.
No, I'm particularly excited by Skyroot. Their launch vehicle, Vikram 1, is definitely a milestone, significant milestone, I would say. It can carry up to 300 kilograms of payload, right? It means that, we have more indigenous options to send stuff up in space. And yeah, we don't have to rely on a SpaceX or whatever else, right? So fantastic stuff. Really, really excited for the space sector.
Yeah. All right, before we wrap up this roundup episode, I want to give a huge shout out to the Tamilprenuer team. They are organizing the Grand Sangamam, which will be taking place next month in Chennai. This is going to be an exciting meetup for the Tamil Nadu Startup Ecosystem. Well, Roshan, are we going to attend the event?
Yeah, we should. I mean, I've already registered. So yeah, you guys should tag along as well. Certainly a very vibrant community, I would say. I mean, it's been a couple of days on the platform, and I can already see so much of activity. Mr. Sridhar Vembu will be the chief guest, right? Our friend Ambi Murthy will be there as well. So looking forward to meeting all of these founders.
Yeah. And folks, if you're also going to attend this event, if you see us over there, do come and say hi. It will be lovely to interact with you. All right, Roshan, now before we wrap up this episode, who do we have up next in the podcast?
Well, we have a very interesting conversation with Ravi Teja of iMums on the podcast. Yeah, fantastic business, really. They were on Shark Tank as well, so some of you might recognize them. They've built a pregnancy support platform working with a lot of ecosystem players as well. Yeah, conversation should be fascinating. Yeah.
Awesome. All right, folks, if you stayed with us right till the end, do let us know how you enjoyed this conversation in the comments below. Also, don't forget to like and share this video with your friends and network. Keep those comments coming in, and do follow us on our social media on Twitter, on LinkedIn, on Instagram. And yes, hope you enjoyed the show, and we'll be back again with more exciting updates from India's growing startup ecosystem next week. Till then, take care and have a great week ahead.
Bye, guys.